The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thanks, Madam Chair. Mine are going to be a little simpler than that. Mr. Moynihan, Bank of America has some of the best economists in the world working for it. I've had a chance to meet with a couple of them. And I guess I'm coming at things a little differently than have been expressed by my Republican colleagues and some of you. Looking at the last few months, from May on, prices have held steady or dropped. The University of Michigan anticipates prices to drop over the course of the next year. So in conversations with your economists, what do they predict? What do they think is going to happen?
Our economists have this quarter, third quarter of 2022, is a positive GDP, negative for the fourth quarter of this year, negative for the first quarter of next year, and I think negative for the second quarter of next year, and then moving positive and ending up at a 2% year-over-year growth rate in the fourth quarter of 22. That's the estimates they have.
No, thank you. And you know, I dealt with them at the beginning of COVID. I don't know if you recall, just to kind of get their analysis, what they expected COVID to do to the economy if we did nothing, if we just, you know, held steady, everything went, we didn't do PPP, we didn't do unemployment, we didn't do any of that, and they said, well, then we're going to have trouble. And, you know, thank goodness, from my point of view, we did a lot to keep the economy moving. And, you know, obviously there's a year-over-year increase in prices, but if we go forward on an annualized basis, just based on August, it's 1.2% for the next year. And if you look at the whole summer, it's less than that. So what I'm worried about is an overreaction by the Federal Reserve. And the last time we saw them increase interest rates like this was back in the 80s and early 90s. And I can tell you, Colorado got clobbered. Housing market just stopped, as did everything else. And so, Mr. Demchak, I'm going to turn to you because PNC had a pretty good-sized subsidiary called the Kissel Company back in those days. I don't know if you're familiar with it, but it suffered a lot of foreclosures back in the 80s and 90s, as did some predecessors to U.S. Bank, and certainly J.P. Morgan. Citi had the same issues. So what do you see? What does your bank see on the horizon in terms of foreclosures? If Mr. Diamond is correct and we get this, you know, we get hit hard because of Ukraine and this and that, I mean, I think most of what we're facing is supply chain disruptions caused by COVID, and that's why we've seen some prices go up. But are you prepared? Is your bank prepared to handle a lot of foreclosures if the bottom falls out as is potential problem here?
Thank you for the question. You know, I would suggest that I think inflation is going to be a little bit stickier than we would like. And I think as a result of that, interest rates are going to be a little bit higher than we would like for longer than we would like. The impact of that on housing is clearly already felt in the creation of new homes and the sale of homes. The impact of that on existing homeowners and LMI communities and their inability to make payments as a function of inflation absorbing a greater percentage of their income is a real issue. We work with government-funded programs, state-funded programs, PNC-funded programs to make sure people stay in their homes.
So have you seen delinquencies rise?
We have not.
You have not seen delinquencies?
Not at this point.
Have any of the banks seen delinquency rise or rising on home mortgages? Nope. Mr. Diamond and I have disagreed over the years on the amount of capital that should be retained. And part of this comes, my dad was on a bank board of a predecessor bank to U.S. Bank, and he was operating under an MOU during those years when the Fed took the interest rate up dramatically back in the 80s and early 90s. So, Mr. Diamond, if you get your worst-case scenario that you kind of outlined, is J.P. Morgan capitalized to take, you know, such an economy?
Absolutely.
Everybody else feel you're well capitalized?
Yes.
Yes.
Wells Fargo? Truist?
Yes.
even if Mr. Diamond's worst predictions come, I mean, he didn't make a prediction. He was just saying it's a possibility.
I think our stress tests are beyond Mr. Diamond's predictions.
Bank of America?
Yes, I mean, you don't have to take our word for it. Look at the stress tests for 10 years in a row. They've been stress testing under scenarios that have the worst indicator of every element that's occurred. So the highest residential real estate prices, the highest commercial real estate prices, the highest unemployment, the highest stock market. And
Thank you.
Look at the results.
I have to yield back. I turn back to the chair.